Hey guys, what's up? Alec back with the daily stock market, and we had an interesting day on Friday. We had NEO up 17%, Square up 11%, gold is up 8%, and many more stocks up. Last week was a very interesting week between all the earnings that was going on last week and also the Fed announcements about the basis point hikes. But make no mistake, this week is going to be just as busy. So we're going to jump in and pull up that earnings calendar here in a second. We also have CPI and PPI coming out this week, adding more volatility. So trading the VIX or even a call on UVXY could be a potential moneymaker this week. However, that is very risky. And if you want to see exactly what I'm doing personally, make sure you message me on Instagram to see what calls or what puts I'm taking out this week. So here we have the earnings calendar pulled up, and we also have the economic release for the week of November 7th. So you can screenshot that and look at it a little bit deeper. But if we pull up the earnings calendar on Monday, we have Palantir. Okay, that's one of the best ones reporting Monday morning. A lot of action going to be happening around them. After the close on Monday, we have Lyft. We have Activision Blizzard, which is basically Microsoft at this point. And we also have TripAdvisor. So those will be interesting to see. Also, maybe Activision Blizzard on bad earnings report can pull Microsoft down. Now, going over to Tuesday, we have Norwegian Cruise Lines, okay, Party City, Workhorse, SunPower, Planet Fitness. After the close, we have Disney stock reporting. We have AMC, which is going to be a very interesting one because obviously all the meme stocks and the apes that want to get involved on AMC, it's going to be a highly coveted and a highly traded stock this week. So make sure you have your eyes on AMC. We also have Upstart. We have Lucid, which is going to be another big one. We have Affirm, which is going to be an interesting one because things like MasterCard and Visa and other banking stocks were all up. But the question is, will Affirm have a little bit of a comeback story on this earnings report? So those could definitely be some potential money makers for this week. If we go over to Wednesday, we can see the Trade Desk, Roblox, Canopy Growth Company, which is a cannabis stock. We have Fiverr reporting. We have Wendy's, Capri Holdings, which is Capri's an interesting one to look at if you don't know about Capri Holdings. Okay. Wednesday after close is Rivian. So based off of Lucid, we can probably see how good Rivian's doing. If you guys didn't know, Lucid is delivering significantly more vehicles than Rivian. So if Lucid has trouble with their earnings, there's a good chance that Rivian will have trouble also. We have Dutch Bros, which is a coffee company. We have Wynn Hotel Resorts reporting, which is going to be travel. We have Unity software company. Beyond Meat is also reporting after the close on Wednesday. Thursday before open, we have NEO, electric car company, Yeti coolers, Six Flags, Ralph Lauren. If we go over after the close, we have Matterport reporting, which is kind of a real estate play, but it's not really a real estate play. Matterport is down also 80%, so that'll be an interesting one. After the close on Thursday, we also have Figs, okay, which is kind of like a Lululemon for healthcare. Very interesting stock that I kind of want to start getting involved in for the long term. So if we see something like Figs drop significantly on earnings, down 20% or more, I'll be interested in looking at and considering picking up some shares for long term on Figs. Okay, we also have Poshmark reporting. Friday pretty much ends, so Thursday after the close, all the good ones are reporting. We basically went over the entire week. Comment below what stocks you're most excited about this week for earnings, and if I didn't get to them in this video, then I'll try to get to them in one of the next videos. Okay, so Lyft was the first one that we're going to be talking about, and they are down 23% in the past 3 months. Now, also down 72% in the past year. One that you might want to look into is Uber, because they just reported earnings, and they went actually up on their earnings, but they missed on their earnings by a large amount. So here we can see that Uber was expected to report a loss of 22 cents. They actually reported a loss of 35 cents, which is significantly worse, almost 50% worse than expected. So like a 30 to 50% miss on EPS. So something like that could possibly be in the cards for Lyft, a big miss also. However, if we look at the price movement on October 31st to November 1st, we saw them gain 12% basically overnight. We also saw them rally around 6% here. But if we go back to October, the beginning, we saw them fall off a cliff, which was the 15% downward movement. So it's interesting. No one knows what's going to happen with Lyft. And personally, I'm staying away from Lyft just because of how Uber has behaved on their earnings. Okay, so let's briefly talk about Disney because they are reporting earnings on Tuesday after the close. And we see them down 5.8% on the week, down 6.8% in the last 3 months. And in the last year, they're down 42%. So yes, this is one of the lowest prices that Disney has been in the last 5 years. We did see an all-time low, a 5-year low of $85 per share. I think there is a chance that we can see Disney around $85 per share once again. If we scroll down, we can see my average cost is around $96 per share. And I only have a 1.5 shares, so you can see I'm saving most of my buying power to buy around $85 or under $90 per share. As we scroll down, we can see that there's also a 57 PE ratio, implying that it's a little bit more overvalued to some other big tech stocks. So that's why I'm putting my money into some other big tech stocks over Disney right now until we see them fall closer to that $85 cents range. Now, we also see that they are reporting on 11/8 like we talked about. Their expectations are a little bit lower this quarter compared to the last few quarters. In Q1 2022, you can see that they had low expectations also, and they ended up coming way over mark. That could possibly happen this earnings season. We did see Netflix have a great earnings season. Now, primarily, Disney is a travel-based business, and we saw travel doing good this quarter. We also saw streaming doing good this quarter if we look at Netflix, for example. Okay, so if we look at a quick update on Disney, we can see Disney is due to post its fourth quarter fiscal earnings result after the bell on Tuesday, headlining likely to be the busiest earning day of the week. The House of Mickey Mouse has fallen 36% in 2022, outpacing declines of major indices like the S&P 500. A few weeks ago, we actually saw a surprisingly strong subscriber report from Netflix suggesting a sustained demand for entertainment. This helped spark a rally for many of its streaming peers into the end of October, including Disney. However, Disney has faced all recent headwinds. Lockdowns in China have recently shut Disney Shanghai. Analysts have trimmed annual EPS expectations 18 times in the last 90 days prior to the earnings report, but have conservatively raised revenue estimates 19 times also. So it's likely that we'll see an EPS miss and a revenue beat. So I'll probably stay away from Disney stock during earnings this season also. We see the EPS should come in around 56 cents per share. We see the consensus revenue is around $21.4 billion for the quarter. Disney has beaten EPS 6 out of the last 8 quarters, by the way, rising above the revenue estimates 5 out of 8 reports on revenue. And the last one that we'll be talking about in this video is going to be AMC Entertainment, ticker symbol AMC. Everyone knows them and not everyone loves them, but let's talk about them anyway. Down 18% in the past week, down 48% in the last 3 months, and in the last year, it's down 78%. Okay, so we can see AMC getting closer to that $5 range. And when we see AMC go down to this $5 range, we typically see a big spike up. So if earnings, I'm probably going to play on the defensive side on earnings, meaning that I'm looking for a big miss on AMC. And hopefully the stock will go down to around $3 per share. And if we see a big fall on AMC, then I'll probably buy some shares on a swing trade or maybe even a call option, because once we see AMC fall pretty big, we typically see like a resurgence around 20%, 50%, sometimes as much as 100% on some swing trades on AMC. So if we see AMC around $3 per share and a big earnings miss, I think that could be attractive. Okay, if we click into the earnings preview, apes face potentially weak quarters. AMC is expected to report third quarter net loss of 24 cents per share on quarterly revenues of $961 million. Okay, analysts reiterated AMC with an underperformance rating and a $2 price target ahead of the print. Okay, now we can scroll down if we can keep reading. Now, in the second quarter, we saw the theater chain report a mixed results. AMC turned into a second quarter net loss of 20 cents per share, which narrowly missed estimates of loss of 19 cents per share. The company reported quarterly revenues of 1.16 billion, which beat estimates of 1.16 billion by not too much. Looking ahead, we could be more bullish about the probability of significantly improving operation results for AMC, beginning with Q4 of 2022 and continuing into 2023, the CEO actually said. Now, the CEO did not mention the third quarter when talking about significantly improving operation results. He did not note that July food and beverage numbers appeared to be the biggest single month figure for the U.S. theater in company history, but he warned of a slowdown in the third quarter, which we can see in earnings miss, it looks like, on AMC. For full transparency, there is a dearth of new big movie titles being released in August, September, so things will slow for several weeks, but then quarter four comes, he also added. Okay, analysts are saying around $2 per share on their price target, highlighting potential weakness in the theatrical business. The volume of content has not returned to the pre-pandemic levels, and release slate holes such as August through October were largely driven by production delays over the last year. Okay, although the analyst firm acknowledged that AMC has the cash position to weather the slump, the stock is still too expensive. The analyst has even awarded the stock a premium multiple due to its 90% plus retail ownership and still expects underperformance. However, as APE shares are trading under $2 per share already and should trade in line with shares of AMC, we would recommend a pair trading. Okay, so that's kind of interesting too. If we scroll up, we can see AMC is around $5 per share. Price targets between $2 and $3 per share. However, if we pull up APE, which is AMC Entertainment Preferred Equity Units, we can see it's trading at $1.50 per share. So they should trade in line with AMC. We can also see that APE and AMC are down pretty big on the week. So the markets might already have that priced in, a big miss on AMC. So something to be cautious on if you're looking into puts. Okay, could already be priced in. We see a 77% downward movement on APE in the last 3 months. Definitely one I'm staying away from personally. It seems like it is at support right now. However, it could trade down due to the earnings miss on AMC. So it could be a good time to reevaluate APE and AMC once they report earnings. And if you want to see exactly what stocks I'm trading personally, when I'm buying, how much I'm buying, the options I'm taking out, call options, put options, how much I'm buying, what contracts, expiration dates, strike prices, and everything in between, make sure you message me on Instagram. Now, I also do long-term trading and swing trading as well, so just message me what you're most interested in because I have programs for each sector, and I also have bundle programs if you're interested in everything. All right. Thank you guys for all the love and support you've been showing on the videos. Make sure you're subscribed on YouTube with post notifications on so you're alerted every time a new video comes out. Click on the success number 6, by the way, if you want to see other student success with the program. And thank you guys so much once again. Share with a friend if you think that they will find this video helpful. And I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.